And we look at Tim.
Okay.
I look at the screen.
Good morning, everyone, and welcome to our series, Fintech Fridays, brought to you by BDO Australia. In our webinar today, we'll be discussing with you customer acquisition strategies for Fintechs in Australia. My name is Tim Aman. I'm BDO's Global Fintech Leader, as well as our National Financial Services Leader. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session, and you can submit these using the question tab. We'll try to get to as many questions as possible. However, if we cannot answer your question, we'll follow up with you after the webinar concludes. If you're experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. Australia's fintech industry has seen a five-fold increase in the number of fintech companies over the past 5 years, with currently over 800 Fintechs here across the country. While the growth in the industry has been spectacular to witness, the levels of competition across the sector is also on the rise, and it comes with increasing costs of customer acquisition. With me today is Anto, CEO and Managing Director at Stropro. Stropro is an investment platform for wholesale and sophisticated investors. They offer exclusive investment opportunities from some of the world's leading investment banks. I'm also joined by Ben Ford, the man of 1,000 t-shirts, head of growth at Frollo. Frollo helps banks, fintechs, lenders, and brokers use open banking to deliver better customer outcomes. They are Australia's first open banking intermediary and have made over 50 million, as of this morning, open banking API calls today. Welcome to both of you on our final Fintech Friday for 2022. Let's talk a little bit about the Fintech ecosystem. As more and more Fintechs join the ecosystem, there's an increasing overlap in the services and product offerings that are being provided to the market. Ben, maybe I'll start with you. Maybe you can provide just a little bit of an overview of the current competitive landscape here in Australia.
Sure. Thanks, Tim. Great to be here. Look, I think we're in a slightly, I'd say, delicate or interesting position at the moment for fintech. I think the ecosystem's been super bubbly and super frothy for a number of years. A number of sort of macroeconomic factors have sort of moved us along with that. I think as we sort of hit the end of this year, and obviously we've run into some turbulence over the last few months, I think probably we're at a stage where the landscape from a competitive perspective is, I wouldn't say saturated, but I think there's probably a bit of an onus on some of those fintechs that have been doing good things for the last sort of 12 to 18 months to really start to execute and sort of, hit some meaningful numbers. I think there are some very, very good fintechs doing very good things, but I think, as I say, there's a number of people doing similar sort of things. We're getting a similar sort of saturation of certain types of products, and we can sort of delve into those a bit more as we go on. But I think probably a few more need to sort of rise to the top and really sort of step up through this turbulence. So I think we will see a fallout of that. I think there's going to be some collateral damage. I think we'll sort of lose some participants, but the strong will definitely survive.
Anto, what's your view of the current landscape here in Australia?
Yeah, I mean, I'll take it through the lens of sort of fintech when it comes to investing in alternatives, because that's the sort of market that we play in. What we've seen is probably a serious emergence of alternative investment platforms open up, primarily to Ben's point about, we're seeing a dislocation in equity markets, bond markets, they're almost converging for investors. So achieving risk return in that market has been quite challenging. So you've seen this emergence of fintechs providing access to things that are not traditionally property equities. So there's, like us, we're in that alternative space, VC, private equity, structured investments, but there are, if you look at the landscape here in Australia, iPartners is out there, you've got Alltex, Reach Investments, they're all tackling some sort of vertical in that alternative investment space. And I've seen that grow rapidly. I would say that's on the back of, recently we went to Singapore and saw the emergence of so many alternative investment platforms. That's probably catching on really fast in the Australian landscape.
Okay. Speaking of Singapore, I know that both of you went to the Singapore Fintech Festival in the early part of November. And maybe you can talk through some of the main highlights of the festival and what do you think about the competitive landscape in Asia? Anto, maybe I'll start with you.
Yeah, look, I think my biggest takeaway is the extreme amount of wealth that's pouring into Singapore at the moment. wealth. And that obviously is going to have significant tailwinds. So investing in startups and emerging companies is a big part of that as well.
What's some of your takeaways, Ben?
Oh, look, wow, where do you start? I mean, I think the scale and scope of it was just sort of breathtaking. So to your point, the sort of government backing and investment was sort of breathtaking. I think there was a deputy prime minister or the deputy premier was sort of delivering a couple of keynotes there. There was obviously the three main themes for those that weren't aware of it was crypto and Web3, financial inclusion, and you can include super apps and sort of wealth type products, and then also ESG and sort of green type initiatives and products. And just the scale of those were absolutely monstrous. I think someone who then went to Money 2020 in Vegas said they thought the Singapore Fintech Festival was just on a different level to even Money 2020 in Vegas, which I guess is sort of Silicon Valley, sort of one of the larger tech events.
Sort of events of the year.
Yeah, absolutely. So I guess the sort of just the heft going into fintech in Singapore was really sort of quite impressive, and I suppose sort of the government in Australia could probably look to that to some degree in terms of the type of support that really is needed to get an ecosystem firing on all cylinders, notwithstanding the amount of money involved and the size of the respective markets and the proximity to other APAC jurisdictions and things like that. But it was just a bit of a head spin, to be honest.
Yeah, the Monetary Authority of Singapore was extremely accommodative to startups, fintechs opening up shop in Singapore. So they're very welcoming, and also there's a series of grants and cost savings to actually open up shop in that part of the world. So yeah, like I would say to Ben's point, having a much more open, maybe a bit more aggressive approach to embracing fintech is probably something that maybe the Australian environment could also consider.
Singapore seems to be one step ahead. I think they've capitalized on the fact that there's a lot of companies leaving Hong Kong, obviously because of the COVID situation in China and just some of the political issues there. But when we were in Singapore the week before the FinTech conference, and we had a presentation on family offices, and basically you've seen a huge influx of family offices in Singapore just over the past 2 years. So I think they're setting themselves up quite nicely. I guess from an Australian perspective, it's difficult because I think as Singapore gets more advanced and they attract more fintechs, it's a good launching pad for people to come in here, and we'll talk about that a little bit further, and we will talk about sort of ESG. Obviously, crypto and blockchain probably was very topical at that time. We've taken.
They were a week early.
Yeah, a week early.
Would have been a very different conference, I think, if they'd run it a week later.
So maybe just on, I guess, just interesting your guys' thoughts, because it is quite topical, just in terms of kind of what's next for crypto, I guess, from a global perspective, and I guess what are you seeing here in Australia? And maybe I'll get your thoughts first.
I'm probably not the expert on this topic, but I guess what certainly in the fintech ecosystem here, a number of friends of mine have sort of started crypto related or Web3 related businesses, staking businesses and things like that, and I guess they were just sort of following the money or sort of gravitating towards the honeypot. And I think the communication from these guys is still maintaining the communication and transparency, which is really good, but just the product offering or the concept behind the product in many respects has been absolutely rocked. So I think there'll probably be some fallout and some that won't make the state of course.
Yeah, I think the whole central bank digital currency piece, which it's been currently worked on, is probably going to be the biggest mover of next year.
Yeah.
You got guys like Zero Cap working very closely with larger institutions to see how they can support a centralized coin in Australia. But I think for me, the biggest opportunity I think in crypto is really about how blockchain and tokenization help operational efficiencies in most businesses. Investing in crypto is another beast in itself, but I think the actual operational efficiencies you can achieve out of using the picks and shovels, the blockchain piece, is going to be the most powerful. What's very interesting is to see how businesses like large clearinghouses and registry providers globally may find it actually quite challenging going into the next 5-10 years, because if you've got a direct consumer who can be basically access their assets on a ledger directly, you don't need some of these larger institutions potentially in play. So there's this kind of, I think there might be a little bit of friction in what traditional investment functions might operate around blockchain.
Yeah, definitely tension. And I think there's obviously probably two camps: the negative people that have been on the sidelines saying what is crypto and what is blockchain, and I think obviously things that have been happening with the chess system and obviously FTX, sometimes adds fuel to the fire there. So it'd be interesting to see what happens. We're starting to see a lot of people approach us about doing potential work on assurance reports. So it's going to be an interesting space for professional services to get in to be able to do more things with crypto companies or exchanges. Obviously, there's a bit of risk, so everyone's sort of taking a step back to see how do we manage that. So definitely, I think something for 2023. Ben, let me switch over to you a little bit in terms of Frollo. You've got an interesting history in Proposition is Australia's first fintech to be an accredited data recipient, and then the first fintech to go live with open banking in July 2020. I guess in terms of providing services to other fintechs, banks, lenders, and brokers, how do you help them deliver better customer outcomes?
Well, a few different ways, Tim. So we have this kind of fairly modular approach where we can sort of be a few different things to a few different people. So we can just provide effectively the open banking plumbing to enable banks to offer open banking related features or services to their customers through their banking app or things like that. Or if a bank wants to engage more deeply and wants to leverage some of the platform that we've built, some of the money management features to offer to their customers to create greater engagement, greater stickiness amongst their base, because they might not have the resources or the expertise to do it themselves. Effectively, they're in a buy or build type situation, then we can help them with that as well. And then also, I guess the key piece, or one of the key pieces within the open banking sphere, is around lending and removing friction from the lending process. And that's been available via different data methods before, but I think there's sort of finally we're kind of getting to this point where there's a bit more pressure on other ways or other means of ingesting bank data. And open banking as a sort of government mandated scheme that's faster, in theory it can be potentially cheaper at scale, but also just a much more optimal solution, and the solution that customers seem to be certainly through our app, the numbers support that customers are more likely to complete a data sharing exercise through open banking as opposed to other methods, because they feel like they've got more control and more autonomy over their data.
And more speed, right?
Absolutely. Absolutely.
Execution.
Yeah.
And I guess maybe, open banking's been around now for a couple of years. Can you just give me a few examples of some new uses that you're starting to see some of your customers start to apply open banking to?
Yeah, absolutely. So, and not just our customers, by the way. So, we spoke about the sort of green movement and green initiatives. The Greener app at the moment uses open banking. You link your bank account within the Greener app, and it provides you insights into your carbon footprint, where you could make potentially better decisions to reduce your environmental footprint or cost, if you like, and make better decisions around that. That's a great consumer-facing app. There's organizations like Kogo out there who are operating on a B2B basis, selling into the bank. So soon, pretty much, I would imagine every bank in Australia, every major bank in Australia will have a feature within their banking app to enable you to review your transactions, or they'll review your transactions, assign a carbon footprint to it, and then enable you to, dial up or dial down where you're spending, or potentially present you with different offers and things like that to make sure that you're, less expensive on the earth. And I think that's really interesting because consumers are sort of increasingly into that kind of thing and sort of embracing and adopting it. But also it seems like the banks have a lot of financial institutions have a mandate now and a budget to do it. So you put these two things together, it becomes a bit of a no-brainer for the bank. So in terms of using open data for good, I think that's absolutely a fantastic use case. The use cases that we all know about around lending or money management, seeing all of your finances in a single place so you can sort of review things and again start thinking more about your spending, being presented with better offers or other accounts that might be offering you a better interest rate elsewhere. Open banking data is far richer than, for the most part, other means of screen scrape bank data. Look, let's call a spade a spade. So there's product information. People will be able to see what interest rate you're on now and potentially offer you a better interest rate, or lower or higher depending on what the product is. So I guess it's all these things are sort of pointing to giving consumers more choice, more flexibility, more competition to make better decisions for them and their families ultimately.
Yeah, and I guess, you touched a little bit about ESG. So, Anto, I think we're starting to see this globally. ESG, you guys probably would have obviously heard about that, the Singapore Fintech Festival. Australian companies are starting to think a lot more about what does ESG mean to them. I guess from your customers, are you being asked anything specifically on ESG?
Yeah, absolutely. I think access to global ESG or impact related investing has been a very strong feature of what we've seen from the investor community. Obviously, a significant amount of money flow that's going into that globally, and it's expected to be sort of anywhere between 5 to 6 trillion over the next decade or so. That's going to move into that. So there's a very strong tailwind for it, ESG and impact. We've sort of responded to that by working with some of the investment banks across the globe to see what they're doing for larger institutional clients, and then trying to bring those opportunities here to Australian clients on the ground. So, we're working with BNP Paribas at the moment on an Australian climate transition index. That's pretty exciting. They've put together something that's quite proprietary and putting that out there. We've tackled on to things like China electric vehicles, greener America, greener Europe. And so, our job is to kind of respond to where the demand is. And traditionally, what's been happening is the investor hasn't had that close proximity to a lot of the institutions. Now we're sort of bridging that gap, and Fintechs is helping do that. But ESG is definitely a frontline flavor at the moment.
Yeah, well, and probably this could link a little bit to predictions for next year, but I think ESG is definitely going to become more and more to the forefront in terms of either more fintechs coming into there, more products kind of around there. We're starting to see, even from a BDO perspective, from a global perspective, ESG probably one of our top 3 priorities in terms of within the financial services sector. So and I think probably the generation of investors are very interested in terms of ESG. So I wouldn't call my son who's 18, he probably can't pronounce ESG, but at some point he's going to be quite focused on focus like that, and a lot of our younger staff here at BDO are really focused on that. So I think it's and I think we're starting to see, even on Australian reporting, companies starting to think through what they can go to market with. And I do think that that's where fintechs are going to play an important role, to your point, on sort of that carbon footprint. So there's going to be some natural alliances that can come into to bear.
Yeah, I think the whole ESG versus impact is an interesting one to consider, the difference between the two. With impact investing, what a lot of investors I've seen sort of managers, how can they make positive contributions that are quite tangible? They can see the immediate impact that they're making. So, whether that be, funding, top talented students here to study at prestigious sort of Ivy League colleges around the world, or whatever they're doing to build sort of organic warehouses that's producing quality social enterprises on the back of that with quality organic food. There's so many ways that kind of takes shape. But that is there is a difference between ESG itself and impact. So I think you'll see the sort of emergence of both as very sort of themes into
very topical.
Yeah.
So Anto, maybe you could tell us a little bit about Stropro, because tell us a little bit about your business model and how it sort of differs from some of the investment platforms out there.
Yeah, absolutely. I think in the nutshell, giving you some context about it, about 3 years ago, we decided that, okay, in Australia, if you wanted to access some of the most institutional type capabilities, you really had to be a private banking client and meet certain thresholds, income thresholds or asset thresholds to access opportunities. So we thought that that was a bit an outdated model, and we brought some of the best investment banks across the globe, about 9 investment banks, to deliver curated products directly to our consumer. And Stropro sits as a platform in between to help build that. So we work with high net worth investors, financial advisors, families, to build them curated strategies by leveraging some of the best trading teams across the globe. Our business model is quite simple. We work with clients to solve a problem. So whether that be yield or capital preservation, or I have this really tactical view of a market, we take that idea or that recipe, feed that across to our big banking partners across the globe, and see what we can bring to them within a very short time frame. So what we've seen is a few things. The speed of execution in getting access to great ideas has improved significantly. You're also being able to price tender a product or an investment strategy across 9 investment banks. So that means that you're probably going to get the best price on the street. So the consumer is in kind of the hot seat. To Ben's point, I think more control over their investment universe has been a powerful theme, and mobility. Like, to be able to bank with 8 or 9 banks today is quite challenging. Open banking probably going to change that significantly for a lot of retail investors, but from an investment landscape, there's a lot of wealth in Australia, almost 2 trillion in investable assets that's sort of sitting with self-managed super funds and people managing their own wealth. So yeah, our job is to be able to bring access through our banking panel.
And I guess it's interesting story, because obviously you just started, you said a couple of years ago, 2019, and I guess maybe you can just provide a bit more context in terms of how you're able to do your development as well as onboard people, because you're up and running pretty quickly, and obviously I had 2 main streams of what you needed to try to do. Yeah,
look, when we developed the application, it was we needed to get a concept up and running, and we try to be as lean as possible to take as much consumer feedback. So the platform in its shape today has been really fed by the thousands that have sort of joined the platform and given us feedback on where buttons should be, where the investment thesis should be, or whatever it might be. So our development has taken a very sort of bottom-up approach from investors, telling us this is how they would like to see how the platform takes shape. We then have integrated with some individuals in industry like ShareSite, integrated portfolio solutions, which is like wealth advisory, reporting platforms, to also help enhance the ecosystem. So rather than trying to build Rome, so to speak, we just partnered with the best in class and industry for various functions. So Atomic look after our registry function. We've got AML KYC providers that are plugged into the platform. That's how we've gone about building the platform, so to speak. And it's obviously early days. I think more fintechs embracing other fintechs to enhance their proposition is probably what you're going to see as a consistent theme.
Yeah, and I think you're probably correct. We sort of started out with about 800 fintechs, and I think next year we'll start to see more partnering. Because partly out of a little bit of necessity, just because the economic sort of headwinds, but also it makes sense. Like-minded companies, entrepreneurs working together. I think is going to be a trend we're going to start to see next year.
Yeah, I think there's a consolidation for sure.
Yep. Yeah. I think that's the kind of embedded finance thematic. It's kind of pretty hot topic, or a bit of a buzzword at the moment, but it's essentially that. I think going back to the question at the very beginning, there's still a number of fintechs sort of operating and doing a great job, but they've effectively built a feature that is going to be sort of swallowed up into a whole, and it might end up in a banking app, or someone else might put it into a banking app, or it might be part of a product suite or a product set. And I think that's absolutely going to take hold, because there comes a point. I remember someone saying to me once, years and years ago, it was like, there's only so many apps I can use on my phone.
Yes.
I can't have an app for this, an app for that. Like I do, and you probably do. And we probably, I've got 70 apps on my phone, fintech apps, including a graveyard of ones that haven't made haven't stayed the course. Yeah. But his point was very, very clear. Was I only have the bandwidth for so many applications that I can interact with meaningfully on a daily basis, unless it's something that's just a complete set and forget and it's operating in the background, which I get kind of is also that sort of holy grail as well, this sort of autonomous or self-driving finance piece.
Yeah, I think on that point it's super interesting, because most of what we're seeing is, well, we manage a certain portion of your wealth, which is in that alternative space, so, that are curated ideas, but how do you get a whole of wealth picture and make decisions around the whole of wealth? Open banking for sure is a pathway to doing that. So the trend that I think you're going to see is a consolidation of fintechs to help the consumer have a better picture of their whole of wealth to make more informed investment decisions. So that partnering piece is, I think, almost inevitable amongst fintechs.
And I think probably the other point in there too as well is with from a global fintech perspective, we talk to lots of different countries, and I think if you just look at the demographics of Australia, one, you've got the lot of money super funds and dry powder sitting around the northern beaches, but also we're capped at 30 million people, and so with a lot of fintechs that I'm talking with now, it's more about what is your next place to go, because again, it's a great incubator of thoughts and ideas, but I think the long-term success of a lot of fintechs are going to be ones that have global breadth and reach. I think obviously what the two of you are doing, open banking, I think it's got a lot to run here, and I think you're going to start people looking more outward there, and obviously the investment base, is going to be, it's more global, just even with the investment banks that you're working with. So going to be interesting trends. I think we're starting to see a lot of fintechs maybe go to New Zealand, but again, that's a small market, and so and we've had a lot of conversations with fintechs in terms of where do they go? Depends on their product, but there's lots of opportunities in Latin America, across Africa, Southeast Asia, obviously. Yeah.
I think also like sort of broader Asia. We talked about Singapore briefly, but in and around Asia, there's great hubs of clients, retail investors, high net worth investors, a lot of wealth management opportunities. Not to be neglected, like you mentioned the New Zealand example. I think New Zealand is a wonderful market to be able to almost piggyback of what you've done in Australia and almost pop up a shop in New Zealand quite effectively. Regulatory wise, it's quite similar. There's not going to be too many hurdles to move into markets like that. So I definitely see a trend, that global expansion piece for a lot of fintechs for them to be scalable. The Australian market, though, I think there's a tremendous amount of wealth, a tremendous amount of people who are open to the way the rest of the world is coming to work. I think the stat that I always share with people is we're the second richest country after Switzerland. So the question it really is how do you actually access that wealth and make it easier for your consumers or investors to access what you do more easily?
Yeah, and I also think the tax regulation here drives people to make better investment decisions as well. So, so coming back to your competitiveness with Singapore, there's an easy way to get more competitive. It's probably changing the tax structure. So which probably won't happen anytime.
Not anytime soon.
But I do think that drives the sort of that educated investor to be thinking differently in terms of seeking better returns.
Absolutely. And that's one of the reasons why I think the property market has done so well here over such an extended period of time. But now, I'm not saying that interest rates will probably impact the property piece, but I think investors need to be conscious about how they diversify their wealth.
So I want to move to the main topic of the conversation, which is about customer acquisition costs.
Sure.
I think we might have a slide in terms of customer acquisition costs, but customer acquisition costs can range from $50 to $300 per customer for the Telmer Insights April 2022 report. And investment apps typically have higher customer acquisition costs. There's been lots of different studies on customer acquisition costs, and most fintechs that I talk with will have some analysis in terms of what that means to them. What I'd like to talk to both of you about is how does that apply, with Stropro and obviously with Brello. So Anto, I'll start with you.
Yeah, absolutely.
How do you track, are you tracking customer acquisition costs? And do you have sort of a benchmark that you're trying to achieve?
Yeah, absolutely. Look, our customer acquisition costs sort of fall within the ranges that you're probably seeing on the screen there, between that sort of 100 up to 150. But that's, I would say, in the early days of, depends who your client segment is. Obviously, we're dealing with high net worth investors, financial advisors who deal with that, and family offices. So the cost of acquisition in the early days is probably not the most accurate number, because you're growing your business, you're growing your resources around it, you're experimenting a lot with actually what is bringing clients to what you do. And so that experimentation stage, that's what people need to be conscious of. We're very conscious of saying, look, if we experiment with something that works really well, let's double down on that and keep those costs low. But I think cost of acquisition is a function really of your LTV, which is your lifetime value. If you can measure accurately what the lifetime value of a client might be, I'm a big believer in that. You've got room for your cost of acquisition to grow with the LTV. So I think it's a relative function. Like our LTV of a client is significantly high. So would we spend more to acquire the right customer, today? Absolutely. But what I keep more consciously on is how that customer is behaving on the platform, in terms of their value over time. Cost of acquisition sort of comes secondary to that, if I can measure the first one. But that's my thoughts.
It's quite interesting, because if you throw back to banking 101, when you used to do mortgages, you'd have loan origination fees, amortize that over a long period of time. And in the US, which obviously where I'm from, that could be a 30-year period, we're starting to get a lot of questions in terms of, can we capitalize our customer list, from a fintech perspective, which obviously you can't do from an accounting standards perspective, but it links in a little bit with the value of that customer list, and we'll explore that a little bit more, because there's obviously a difference between acquiring a customer and then are they actually doing anything,
retaining and activating them. Our activation rate is sort of around that 30%. And we know that, with more content and all the other activities we do, hopefully that, that conversion rate goes consistently up. But I'm very conscious of how the client is activating and purchasing products. What's their product depth ratio on the platform? How often do they invest? What's the time in between their first investment, their second? Is that falling over time? So we look at a series of metrics to understand what's the value generation there. Your cost of acquisition is probably a little bit different.
Yeah, Ben, maybe you want to talk about it.
Yeah, so it's a bit more complex, but I'm just looking at those numbers and I'm thinking we're probably in the other fintech section and probably about half of that, I would say. But there's a reason for that. So our consumer facing app is effectively a free app that we put out there, no monetization whatsoever. So there's no return coming in at the other end. It's really designed to sort of help people get a hold of their finances and sort of become more educated or become, on a path to financial wellness, make people feel better about money. That's the aim with that. But then we also get this great feedback loop of what our customers want that we then feed into our platform that we sell on to financial institutions and fintechs and banks and things like that. So it's not that there's not, but it's extremely hard to measure that ROI from the cost of the customer. But routinely, when we're speaking on, financial or banking type engagements, the SLT of a particular bank will look at the app, and that will be sort of one of the things that sparked up a bit of interest or sparked the discussion. So becomes really murky on the B2B side. Completely, we're not really comparing apples with apples. So I wouldn't even know where to start with that, to be honest. But I certainly think, and again, I'm just sort of looking into those stats. We were just speaking about, a fairly successful fintech that might be right at the bottom end of that, but then we also sort of know of plenty others that are, $100 plus, and if you're not sort of monetizing that really successfully, then that sort of isn't going to be viable long term. And I think that's sort of, we've probably seen that over the last 12 or 18 months with some of the sort of so-called success stories that have kind of fallen off a bit, and they probably spent a little bit too much on customer acquisition and not created a sticky product.
Yeah, exactly. Yeah. It's also relative to industry, I think, because we're comparing sort of the fintech ecosystem on customer acquisition. But if you look at how a traditional bank will spend on acquiring a client, whether that be a retail investor or a high net worth investor, that can range anywhere between $500, or for a mortgage client, a client who's doing lend, $500 all the way up to tens of thousands. So comparatively, where you're getting optimization with fintechs is that they bring that cost considerably down. So it's a relative to also industry, I think.
It's really interesting, because I think, again, if you look at the bigger banks, they've got such stickiness with their clients. I think what we're seeing in the fintech space is, as we talked, there's lots of different fintechs. There's lots of potential saturations in certain parts of the fintech market. And so if you're first to the market or one of the first ones to the market, then it's probably okay. But if you're 10th, 12th, 20th, that's a little bit harder. And I guess, obviously one of the struggles with fintechs is how do they become profitable? And so, I guess any advice in terms of, if you had to do it again or give advice to fintech, how should they be approaching, I guess, spending on cost of acquisition? Because you see lots of different campaigns and which costs a lot of money, but just any sort of advice you could give.
Yeah, I think, if I had to do things again, I'd be just doing a lot more experimentation in the early days to see what customers value and what actually drives revenue to the underlying business. So for me, what's very interesting is, you can go build a lot of features and enhancements and really get intertwined in the vision of what you're building as a fintech, because you're thinking, I'm going to go from here all the way to what Rome looks like, as I was saying before. But it's sometimes just a series of quicker experimentations to really understand, does this work? Is it being received well? Is there value generation? If you can get that feedback loop much faster with your prospective client and bring them actively into the conversation, I think you can always build a better product and naturally keep your cost of acquisition quite low. So yeah, we spent a lot of time with our clients in the early days, and one thing that we should keep consistently doing, I think, as Fintechs, is just listening to what the customer wants, you know, and not thinking that, you know, you've got the ideas that are probably going to change the world. Your customers are changing the world with you.
What do you, any advice, Ben?
No, I think that makes perfect sense. I think sort of being probably lean and super iterative and being able to sort of be fleet of foot is sort of key. Look, there's been a few success stories where people have, you know, spent a lot of dollars on advertising on buses and other places, and I'd just sort of warn against that. That can work in some instances, but if it's sort of something's too splashy and too flashy, then I wonder if it's sort of going to have the ultimate long-term success that you're looking for. It can give you an immediate impact, and that's great, but I'd probably sort of diversify out, and I'd probably spend more money on someone who understands Google Ads, understands Facebook Ads, SEO master and things like that. You know, I think probably the immediate whiz bang stuff is good for getting your name out there, but if that's your main sort of customer acquisition channel, or one of the main ones, I think probably it's just too expensive.
Yeah, and look, I think if you're opening up an investment platform or a fintech, you really got to understand your competitive landscape well to understand where your margin compression is going to be over time. You know, obviously clients are happy to pay for a great service offering, but when you're competing against 10 or 15 other people who are doing the same thing in your space, over time, what you'll find is that margin that you initially thought you had built in your business will fall. So pivoting your business model to be adaptive and maybe find other revenue streams in your business is something also, as a fintech, you know, you should be, if you're a founder of a fintech or you're in that space, should actively be doing, because that's I would say the biggest thing to look for.
Yeah, and I think it's a good point, because I think also again, if you're looking to head overseas, sometimes what works in Australia is not going to work in other countries. So it's that agility, I think, is quite important. And I guess it comes back to a little bit about what is the fintech trying to get out of being a fintech. So a lot of fintechs I talk with are looking to be acquired. So they might be looking at building customer lists to be bought by someone, and you're not as worried about the cost of acquisition. You know, obviously, if you're long term, you need to become profitable. So we're starting to see, well, I'm starting to see with a lot of fintechs is they're being asked more questions about that profitability base. You know, so is the model working? And obviously, it comes back to the cost of acquisition. People are trying to take a closer look at that. And so I actually think there's going to be a bit of a refresh in terms of how people are approaching that sort of next year.
Yeah, the question we get asked, and I get asked quite a few times, you know, what's the IP in the business? Like when you look at a fintech, so if you can really show that there is a proprietary technology or proprietary solution that can also add enterprise value. Having a distribution list is exciting and a client base that trusts you, but you know, it means that your business model might not be as scalable as you think. It can be, you know, almost sucked into something else. So building enterprise value by having some IP in your business that's scalable, but also people appreciate that's you've built valuable infrastructure or a piece of proprietary technology. I think that's really powerful thing to look at too.
And I think,
sorry, Tim, I was just going to say the other thing that just as we've been talking is you know, if you want to create long-term sort of customer engagement, you know, the sort of growth 101 strategies or fintech 101 that have been really successful for people overseas, you can get some good pointers from that. But really, just sort of, you know, whether it's creating organic content or just building a long-term sort of, or the basis of a long-term relationship with your customer base. You know, think about, say, Chris Bricky from StockSpot. He's sort of consistent with his content, no sort of flashiness to it whatsoever, but really useful sort of pointers that whether you're a StockSpot client or not, you take on board, and they're going to be useful for you across your investments. And then ultimately, you might become a StockSpot customer, and once you keep getting those messages and that content, and you know, generally the performance is not bad, but obviously that can always change. You're probably not going to go anywhere in a hurry. Whereas if you just dive into you know, a share trading platform for a quick buck, then you know, you have one bad deal, you sort of go off it, and you sort of move to the next one or something like that. And again, I think there's nuances to all of that, but I think that's probably quite important as well in terms of sort of building something long-term and sustainable.
I think building credible content and quality content that your users are taking away value from is much more important maybe in some ways than, you know, just whatever happens from a user experience of taking the product offering.
Yeah.
So the content piece is a big one. We love content, so we love producing stuff like this as well all the time. So.
And I guess you touched on a couple of key points there in terms of, I guess specifically in your business, how are you building trust? You talked about spending a lot of time with your customers, but you know, the fintech industry is relatively new, you know, and you know, there will be people that you're probably talking with that have a horror story about a fintech that didn't quite work. So I guess, you kind of, what is your approach in terms of building that trust and making sure it's the right sort of client experience?
Yeah, absolutely. I think when we were looking at building trust, particularly with the types of investors we deal with, we knew that we had to work with very credible, established institutions in industry and kind of bring them to where we on our journey with us, but by being around big giants. So, you know, we've got the likes of Citi, Goldman's, Morgan Stanley that we're working with, and a few others. But primarily our clients go, okay, Stropro is this elegant, you know, platform, but behind these guys are established players. So building that trust in the early days was just about going, okay, look, a fintech, but backed by reputable large investment banks across the globe. And then what you end up doing is you realize, okay, you're now building a journey where you can take our customer from going, okay, I know who Citibank is or BNP or whoever it might be. Now, maybe if Stropro wants to build products for our clients directly, that starts to bridge that gap. So for me, I think it's about, for us, building trust was working with established players in the industry and slowly taking our clients across the journey with us.
Yeah. And Ben, what about you? Probably say, like, open banking is, I've had other people that come on and talk about open banking, and there'll always be someone that sends in a question about, you know, people are trying to get way too much information from me, and where's the confidentiality, and can I trust, you know, kind of open banking? So are you starting to see that improve, or people understanding the value of open banking and building sort of that trust in the wider Australian community?
Yeah, 100%. I think people have always understood the value. I think there's been sort of these various sort of roadblocks or hurdles to getting to the point where it's sort of been fully usable. And fully workable, which we're kind of at that tipping point now. I guess from a follow perspective in terms of trust, we've done a lot of education of the market, has have other players in the space, but you know, we put out a huge amount of content. We do a state of open banking report where we sort of collate other industry participants to get involved, whether they're our clients or not, who might be live with open banking. So we kind of it's kind of an abundance mindset, I guess. We're sort of, you know, open banking's here, we're a part of it, there's other people who are a part of it, and we just want to sort of pull the ecosystem along. But it has been an awful lot of education, and still is, with sort of banks and regional banks and different types of banks, even major banks actually. Was, you know, still very much early in the journey, or, you know, it's had a place within the business, but it's sort of been buried, or certain people have now left and you have to start again. And it's just been a complex journey, and I guess we've just sort of had to try and educate ourselves first, but then educate other people along the way as a bit of an early adopter in the space, Tim.
And I guess one of the things that we're starting to see is obviously people are somewhat dissatisfied sometimes with the financial institution. I think there's 69% of people aren't happy with the level of service they're getting from their bank. And then obviously fintechs, you know, pride themselves on that sort of client experience, you know, 90%, you know, positive client experience. Are you starting to see a shift? You know, I guess the trick is someone's unsatisfied, and will they move to fintech? Are you starting to see that linkage between unhappy with a big bank to come into a fintech player?
Are we starting to see, I don't think it's quite ready yet. Open banking payments should be a major driver of that, and that's certainly what's happening in the UK to some degree. Within a beta version of our app, we've got the ability to see what interest rate you're getting on a particular account, present you with the 3 next best alternatives, and then go to start the process of moving an account, but you can't complete the journey of moving the account yet. Once you get to that situation where you could conceivably have a 5-click account switching process, then I think that's going to be extremely popular, or say 5 clicks, it might be a bit more than that, but that's going to be extremely popular with consumers, because you're absolutely right. People are, you know, they talk about this lazy tax of $11 billion, according to a study by the Queensland University of Technology. It's not really a lazy tax, because people can't move, even though they want to. It's the cost of the prison tax, if you like, of having to stick with your bank or your superannuation provider because it's just too difficult to move, so people give up. But you know, ideally, the sort of nirvana or the utopic view with open banking is we could start to chip into that $11 billion and get it down to $7 billion. So you've reduced by $4 billion the amount of money that Australians are effectively kind of wasting because they're locked into products and services that aren't performing for them or aren't delivering to them. And that's why we are pushing this open banking agenda, and why, you know, it's not just because it's our business, but, you know, we fundamentally believe it's better for Australian consumers and Australian families and households.
Yeah, I mean, from our side, we're seeing sort of a transition of two things. One is you've got, you know, over the last few years, you've had a Royal Commission into the banking sector. A lot of banks have stepped out of wealth management. So you're seeing that the optionality that, you know, investors have with a bank, a traditional bank, is probably a lot less. So that universe of options is a lot less. You're seeing a lot of wealth in Australia is actually managed either through managing it yourself as a private investor, or you've got an advisor that works alongside you, or your trusted accountant. So now, for those individuals, how do they access opportunities for their clients? Is probably going to be through fintechs in most cases. So we're definitely seeing a transition from a lot of traditional banks across to platforms like ours, where opportunities are much more quicker to access. The thresholds are a lot lower to participate. You get a lot more transparency over the performance, which is a big thing. It's that whole piece of transparency. And I'm seeing that transition already across not only Stropro, but other fintech platforms. So I'll see that trend continue, I think.
I think both of you are in a great space with open banking and sort of that, the output of the Royal Commission in terms of the bigger banks stepping away from wealth at the current time. Obviously, I do think that banks eventually will look at it and say, what have we done? And they'll move back into that. But it's a great opportunity now for fintechs to sort of capitalize on that vacuum. Yeah,
look, and if they move back into that space actively, it's going to be probably embracing fintechs within their own businesses to build that proposition. So yeah, we're in a very unique time where the Australian landscape, like you said, has a lot of dry powder. People are looking for opportunities, not necessarily tied to the market, but in any case, they look at fintechs as a way of doing it. And I would say traditional banks are probably well equipped still to deal with wealth, but not have the diverse range of opportunities that maybe a fintech can provide.
I was just going to say we're talking about open finance here as well, so I just want to sort of extend the conversation. You know, open banking is what we have at the moment. That's the banks being mandated, but over the next 2 or 3 years, there are a couple of consultations in place at the moment. So superannuation funds will have to make their data available. We'll have open energy, open telco, and things like that. So there will be this broader sort of pot of data, and all of that points to consumers. All of it's in the consumer's interest to enable them to make that switching or whatever it is to move to better products.
Yeah, I think that's a good point. I think people get caught up because everything starts kind of in with the bigger banks.
Yes,
this is going to be much wider than that.
Yeah, look, I think the data sharing piece is an interesting one, given what's happened recently with a few big data breaches. So I think alongside, you know, having your data more readily available to optimize your sort of service offering and costs and your mobility across multiple products is a big part of it. It's going to be how that data is managed and securely kept. And so maybe back to that sort of crypto point we talked about earlier, I think there is a home for blockchain and tokenization and privately storing a lot of this data for investors, but that's probably the secondary offset to opening up a lot of that infrastructure and data is how that data is securely managed.
Yeah, links in with trust, you know, so this is where I think the path is going to be over the next year or so. Just switching a little bit to innovation, because obviously in the type of work that you're doing, like, I guess maybe explain innovation in your business and how do you balance that with your customer needs?
Yeah, so innovation in our business is going to come down to really investors telling us what things that they would like to see in their investment product. Now that has been traditionally very hard because most consumers in the investment landscape are pushed an idea or, you know, here's an investment strategy that you should think about going into. I think if you put a little bit more control back in the investor's hands to say, look, this is the target rate of return I like, or these are the market exposures I like. I'm worried about, you know, the market falling by, you know, 10, 20% over the next 12 months. How do you factor in a series of those things into what ultimately would look like the investment strategy or investment product. So I think the innovation in our business is collecting that data from a consumer and then being able to relay that back to an institutional capability like an investment bank to then build a product. So 70% of what we've done to date has actually been built off the back of ideas from customers, which means that they're in the hot seat. They can control their sort of investment universe. And I think what's really interesting about that is just that's where I see the biggest innovation is putting a lot more control back in the client's hands to dictate what they'd like to invest in.
Yeah. And Ben, from a pro perspective, how do you manage innovation there?
Oh, look, it's constantly evolving. I mean, we consider ourselves to be very product-led, and really it's just sort of taking feedback from the customers. As I say, we've got the consumer app, which allows us to get a lot of feedback from customers on a day-to-day basis as to what kind of things they want in a financial application, and then we sort of test all of that out, and then you know, if it passes the test, then we start building it out and adding it to our product suite. But I think increasingly, you know, to the point that we discussed earlier, there's going to be something of a consolidation. So we sort of don't have the bandwidth to do all of it ourselves. We'd love to build, you know, the super app to kill all super apps, but you know, we've got our hands full. We're a relatively small team. We work fairly aggressively and fairly fast, but you know, with the whole open banking, there's a huge amount to do. So I think there will be some partnerships and some other things that we'll look to embed into the app if it's proven that, you know, there's appetite from customers, which, you know, hopefully there will be.
I also think one of the other things when I'm seeing as a trend is most customers at the moment are very, in Australia, Aussie-centric in the way they look at their investment universe. So what I sort of see as an innovation in sort of the investment landscape is how do you become a more globally minded investor? And to do that, you need to open up architecture which accesses global markets, right? So I think that innovation to be able to invest in products and strategies and opportunities in different global markets is really at your sort of fingertips, is going to give a lot of, I would say, choice, but also innovation the way investors think in this part of the world.
I would agree, because I think if I look at myself, I've moved around to different countries, and every country you've got a different investment advisor, because you can't have just one person that can do everything.
Centralize it.
Centralize. Yeah. And so that make my life a lot easier. I could just have one person. So I think hopefully that will continue to evolve over the next year or so.
Absolutely.
We're almost at the end, so you know, I wanted to thank you both for your wonderful insights and about customer acquisition, and I guess more broadly the fintech landscape here in Australia. Before we wrap up, we just want to see if there's any questions. Okay, here we go. Question number one. Let me read it for everyone. What do you expect to see in 2023 related to the fintech regulation in Australia?
It's an interesting one. You know, you can take it from multiple lenses. I think there's going to be a lot of regulation possibly coming into, you know, crypto, blockchain. That's probably where I see the most aggressive sort of regulation take shape. For investment platforms like what we do, you know, we would use traditional, you know, licensing in Australia to be able to deliver our product to customers. There might be also some thoughts about regulation changing in terms of suitability. So today we have a very distinct way of measuring between someone who's sophisticated and a retail investor. I see where Australia takes shape in terms of how we deal with investors, probably moving more to a European style model, which is understanding whether you are suitable for the product without necessarily having a full personal advice element layered over the top. So, you know, today, if you need advice, you really need to have an advisor looking after you. Are there ways to actually, you know, potentially help customers make more decisions based on the suitability of a product? So I think that, and also what we're seeing in crypto and the technologies around crypto are probably the two areas of probably I'd say regulation.
Yep. I think the crypto stuff, I know Senator Bragg is kind of really beating the drum for that, and he's doing a fantastic job. You know, from our perspective, there'll be more open banking or more data sets being brought into the open banking or the open finance arena. So non-bank lenders are excluded from the CDR, Consumer Data Right legislation at the moment. think there's a consultation out now. I lose track. They're sort of running a few different things in parallel, so sometimes it's hard to keep across it. But I certainly think that one will come in, and that'll be great, because that's a big missing piece of the puzzle at the moment. And those guys are sort of sitting on the sidelines to some degree, because they don't know whether they're going to have the obligations to share the data as well. So that will eradicate some of the confusion there, I think.
The data security piece, I think, is the biggest one.
Yeah.
Like, we've had a couple of significant breaches. You're seeing it also happening overseas. It's not like Australia is the only place in the world that's happening. So data security and legislation on how, PII data is stored is going to be probably a moving piece.
I also think we're probably due for some change in the AML KYC regulation, because that just doesn't feel like it's changed since I was working on it in 2012. And increasingly elsewhere there needs to be some kind of biometric or some kind of face-to-face verification. It's not mandated here at the moment. It's a sort of nice to have, and I think there's probably one reason why the take-up of it for pretty much everything except mortgages, you don't need face-to-face confirmed verification, I think. So I don't know. It just feels like there's it's a very hectic space. There were loads of companies doing that in Singapore. There was almost sort of a whole area dedicated to those guys. So I'd be surprised.
I'd love to see, for me, like a trend would be to see the mobility of a client who gets verified in Australia can be easily verified in another country with almost like a global passport, so to speak, when it comes to verification. So, if there's any regulation around that helps improve that would be a sort of a welcome thing for most fintechs, I think.
Well, I think the interesting part of regulation is how quick, so again, from a competitive perspective, I think the regulation has to meet the demands of what's happening here in Australia and to match what's happening globally. Otherwise, I think you run a risk of global regulations moving quicker, and then naturally people are going to gravitate to where there's something that's already in a regulated environment. So interesting space.
I'll take this one.
Yeah, you want the next one?
I'll take this one.
So I'll read the questions because people can't see it. So the question is, do you think super apps will be bought to Australia from a tech giant, or will we have homegrown ones? Did you write that yourself?
I sent this one in earlier. So no, it's a great question, and it's extremely personal. I'll just try and be very quick. But so interestingly, I think Block will bring what used to be, or what was the bones of Afterpay Money, but they'll bring the Cash App to Australia. So we're speaking about the size of the market. I think the Cash App is has 66 million users in the US. You probably know this better than me, Tim. And really, a lot of those users are from sort of groups that might be described as unbanked, or previously haven't had access to financial apps and fintech apps and things like that. So I think that's a really good thing. Whether they'll how they do over here, like in theory, you'd say they'd come in and it's a no-brainer. People will gravitate towards it. It's a very hip and very cool product. I guess the call out would be that there's other super apps here. Revolut, for example, is obviously I think the biggest super app. I think there was so one of the biggest, and I probably wouldn't say they've had the same success or traction here that they've had in other markets in Europe and things like that. So it's a really good question. I think we'll see the Cash App, maybe one or two others. Will they get the same kind of success and take up here that they've had elsewhere? I don't know. It's interesting. I think there might be a bit of sort of pushback as some Australian apps sort of broaden their horizons and start to offer more, and maybe have a bit of a refresh in the new year. So I'd watch this space.
Okay, so this is now to 2023 predictions. I guess Anto, any prediction for the state of fintech as we end 2022 and go into 2023?
I think my probably biggest prediction is that the market will shrink a little bit for the better. The consolidation of a lot of fintechs, I think you'll start to see that, because they're more collaborative. That saturated market that might be growing, you might see a bit more of a consolidation of sort of, naturally complementary sort of businesses which are serving their customers. So I think for me, if you have a unique, service proposition to the market, you're probably going to sort of stand on your own. If you've got complementary things that you do alongside other fintechs, there are probably opportunities for a lot of M&A activity probably next year in that space. So I think there's going to be a rationalization or more of a consolidation in that fintech space.
Okay. Ben, you can't choose the same answer. So
well, first of all, I completely agree. I was just going to say, I think feels a little bit at the moment that there's kind of this two-speed economy when it comes to fintechs. There's a lot of sort of corporate dollars knocking around and investment dollars looking to invest, but then I think some of the fintechs on the ground are actually really doing it quite tough. And so those two speeds are not the same in any way. So I think there'll be a contraction. I think the number of new fintechs cropping up, it does not correlate with the level of meaningful innovation. So I think some of the ones that are just sort of Me Too type products or Me Too with a different sort of skin on them, probably might find it tough to get 100,000 customers, which I think is what you need to, and
that's to really scale it.
Absolutely. So if you're a consumer-facing app and you're sort of going mass market, you're not getting 100,000 users pretty quickly. I think your burn rate is just going to sort of throttle you, to be honest.
And cost of capital's
going up.
Significantly higher. And so if you don't have I think a scalable business or a path to profitability, it's always going to be quite a challenge, I think, for the next year. So something for fintechs to consider.
Okay, thank you guys. That brings us to the end of our discussion. Thank you, Anto and Ben, for your valued insights. I'm sure everyone would agree that this was a great session. This is our final FinTech Friday for 2022. We'd like to thank the audience for attending our webinars for the past year, and we look forward to returning in 2023 with fresh FinTech content. The details of this webinar will be shared with you in a follow-up email from today's session. If you missed our other webinars, my team are adding links to watch them. Finally, before we close the session, we'd appreciate to fill out a short feedback survey that we'll launch once we close the webinar to help us improve for 2023. Thanks again for joining today, everyone, and have a great Christmas holiday period, and see everyone in 2023. Happy Friday. Thanks.